Time now for the markets with Leighton, and this year's outlook for the hog industry is not quite as bright this week.
No, apparently not. Profits, in fact, are having to be trimmed back some, as we'll explain. Also ahead this week, retailers may help put a floor under cattle prices. That recent U.S.-Colombian trade deal benefits the rice industry, while some believe U.S. cotton may see additional exports. The value of boxed beef sales has been growing and is in fact helping to support the beef complex. However, the cattle sector saw as a whole some price slide at midweek here due to uncertainty about pork demand and some sharp outside market pressure. Analyst Tom Fitzenmeyer says while fund liquidation is what started the recent problems, a lot of other issues also helped to magnify the negative situation.
Things have kind of gotten cleaned up. The exports were off last month. That didn't help any either. The dollar's been firming up. That's not helping. So I mean, there's cattle did great this winter. The rate of gains were awesome. So there's more tonnage available than we'd really expected. So there are a lot of things that came together to sort of magnify that fund liquidation when it came along.
Continuing in livestock, the lean hog futures have suffered some sharp losses this week. And there is also a less than rosy profit outlook, as we mentioned earlier, on the table for pork. Analyst Chris Hurd of Purdue Extension says higher feed prices in the past few months as a result of crop damage in South America has increased producer cost, thereby reducing the profit outlook for hogs in 2012. Pork supplies this year are expected to rise by about 2%. But analyst Hurt says demand is expected to absorb the modest increase, with exports continuing to be that all-important component. Now, the current outlook is for profits of just $4 per head this year, whereas last year they were estimated to be $14 per head. Time now to look at our trivia quiz here on Farm Week. The aging of America's farmers is our topic. What state has the oldest farmers and ranchers? Here are your possible answers: Arizona, Mississippi, New Mexico, or Texas. I'll tell you in just a moment. That new free trade agreement between the United States and Colombia offers apparently important short and longer term economic benefits to U.S. rice, as well as the millers and exporters. The chairman of USA Rice, in fact, goes so far as to say it is long awaited good news for the industry. Jackie Lohr said this week the U.S. rice industry now stands to gain a sizable export market in Colombia. The agreement announced by President Obama and Colombian President Santos goes into force on May 15th. Meanwhile, concern about southern plantings remains the major supporting factor in the rice market itself as this week winds down. Arkansas Farm Bureau reports export demand is still not good, and rice is struggling, they say, to find higher ground, according to many analysts. While the planting intentions report said acres are expected to fall by nearly 5% this year, many in the market believe this decrease could be even greater, especially when you consider Mississippi, Louisiana, and Texas. Analysts are blunt in even saying it is difficult to see prices moving significantly higher with large world stocks and what looks like strong export competition. Well, cotton closed higher Wednesday of this week in response to an announcement by India regarding a recent export ban. Extension Ag economist John Michael Riley joined me in studio Thursday morning to discuss that development as well as the recent supply and demand numbers. John Michael, before we get into the latest government numbers, let's divert briefly to the Indian situation. There was some news out of India late this week that sparked the market a little bit.
That's correct. Reports from India saying that they're going to open up their trade, allowing some exports of cotton out of the country, which is definitely going to put some more cotton on the world supply. Has a chance to dampen prices as a result of that. It didn't completely catch me off guard when I read it. If you look back to the report, which we'll talk about in a second, India showed from the previous month's report that their beginning stocks were a lot larger than had been expected, and pushed their ending stocks up about 20%. So I think that had a lot to do with them opening up their borders and trying to get rid of some of the cotton that seemed to have been accumulating.
Okay, well, we're about over a week out now from that April 10th supply and demand report. And how is the cotton market, before we talk about the numbers, did it really make any major move in the market as far as cotton?
If you look at what prices have done over, from today versus that point in time, they have come up just a smidge, mostly been steady across this whole time. Now, there's been some price ups and downs as over the past couple of days since the report was released, but the report was really a tugging of both in two different directions. If you look at the domestic side of the report, a very positive report. Cotton production down a little bit as we got the cotton ginnings report in late March, and overall production and ending stocks were declined, and exports increased from a domestic standpoint. Ending stocks down about 500,000 bales at 3.4 million in the most recent report. So all that was good news. But if you do look at the global supply, as I alluded to, India higher beginning stocks compared to where we thought we were at in February. China importing more, so their ending stocks were bumped up. Overall, ending stocks in the world up 6%. So that was put a damp on prices. The domestic news increased prices. So it was a bit of a tugging, and so we have seen mostly steady prices. Although again, we have seen some volatility.
So one more question, longer term, do you expect some further support for cotton prices to move up, or are we likely to stay where we are here?
It's hard to see it right now. Planting progress ahead of schedule, 13% U.S. versus 9% average. So that's should only help yields, but there's still a lot of growing season left, and if the drought, which is alleviated, if it comes back, that could hamper production.
Just before the new feature story, here's the answer to the trivia quiz. Well, New Mexico is the correct choice. The average age of farmers and ranchers there is nearly 60 years old.